again. Okay, so like I said, at the top here, they've given you all of your opening balances here, and then at the bottom, all of your closing balances. And then they've given you the transactions for the period. So they had said to you that these are the ledger accounts that they would like you to draw up. So it was your direct material, your direct labor, your work in process, finished goods, indirect material, and so on. So it's everything basically up until the profit and loss account. As I said, in a typical exam question, they're not going to ask you all of these. It would be it would be a couple of them, so maybe about 5 to 6 of these ledger accounts. And a typical question on this learning unit would have a mark allocation of anywhere between 30 to 45 marks. So obviously, depending on the number of ledger accounts that you're drawing up, and if it is based on your production statement and your your 4 notes, then it generally is for also about 45 marks. So here they asked you to draw up these ledger accounts, and the first one was your direct material ledger account. So your direct material ledger account, and I'm just going to draw it up very roughly here because there's not much space for me to draw it up quite neatly. So here is your direct material account. Yeah, your direct material account, and you have an opening balance of 8,644 that has been given to you here. So you will state that this was for the 1st of May as your date. So you'll say May 1st, and your opening balance is the 8644. Then they said to you, and remember, you're looking for anything that was purchased in terms of your material in cash or on credit. So here there was credit purchase of your raw materials, and it was 42,936. So here it would be creditors control, and you'll put in the 42,936. Yes, sure. Let me change the color on that. Please, can you let me know once I start writing again if you are able to see the color on this? Okay, so that was your credit purchase, and then any other, if they do mention to you as well that you had cash purchases of your material, you must also include that on the debit side, and it would be bank. Then you have any mention of material, direct material purchased and the freight that you had paid for it, or carriage, railage, import, customs, and so on, import duties, customs, and so on. Here they mentioned it to you, but they told you that the freight on the raw material was on credit. So you will also say creditors control, but within brackets, you will state that it was for freight. And the amount of this is 6,940. Okay, so that would be 6,940. Alex, are you able to see the writing with this color? Is it any better? So here on the debit side, you have everything required. On the credit side, okay, perfect. So on the credit side, you now have the work in process account because a certain amount of materials is allocated to the work in process account, to the factory basically, to enable the production of items. And then whatever is not closed off will remain as the balance in this account. So we need to look for either the balance or the work in process figure. You always start off with looking for a balance because that's more common in terms of what they provide you with. And then you do have a raw materials on hand figure at the bottom, and that's 6,298. So the 6,298 then would be your closing balance, and then now you can sum up everything on both sides to give you your total, and that is the larger total is the one from the debit side. So 58,520 goes in here. Remember, you total both sides. Whichever side has the greater total as it stands is the one that goes into the bottom here. So now you have the 58,250. You'll subtract the 6,298, and that would give you the work in process figure of 52,222. So you know now that this amount of material, 52,222 Rand worth of material, is going to be allocated to the production process in this particular month. So you have the amount for work in process now for the direct material. So at the bottom here, I'm going to draw up the work in process account, because as we're going along, I'm going to start entering the values that we have determined with each letter account. So we know that direct material was just done, and the direct material account that is going to come from the direct material amount that's coming from its respective ledger account is the 52,222. So we're done with the direct material account. Let's look at the direct labor account. So the next one is your direct labor. Remember, it has no opening and closing balances. So I'm going to just erase at the top here because I don't have much space to work with. So here you have the direct labor account. So direct labor, no opening and closing balances. You're going to only have any labor that is paid, of any wages that are paid, together with any medical aid contributions, pension fund, UIF, and so on. So your labor is within this portion. As you can see, it says direct labor, and the factory wages is always written as, and you will put the last day of the month here. So you can say this was the 30th of April. So April 30th, but again, there aren't any marks that's generally allocated to the date. So it'll be creditors for wages, and you'll put in the amount, which is 51,560. So 51,560. Then you have any contributions. There's pension, there's medical aid, there's UIF. So you're going to include all of those. So pension is going to be the 9,644. The medical aid is going to be 13,948, and the UIF is 516 Rand. So now this entire amount is closed off to the work in process account. So this amount closed off to work in process is 75,668. So you'll take that straight to work in process. At the bottom here now you have direct labor 75,668. Okay, so we're done with your labor account. Now let's look at your factory overhead. So your manufacturing overhead, and I'm going to just do it in the middle here because I don't have much space. So manufacturing overheads is going to again also not have any opening and closing balances. Actually, before we do the manufacturing overheads account, they did ask us for the indirect material account here. Let's do that first because we need the figure from indirect materials to go into the factory overheads account. So we did the first one, we did direct material, we did direct labor. Let's do indirect material and then we'll do factory overheads. So your indirect material is treated in the same way as your direct material. So remember, we're looking for, so indirect material we're looking for any opening and closing balances of your indirect material and any purchases of your indirect material or freight charges of your indirect material, and then you close off a certain amount to the manufacturing overhead account because indirect material falls into your manufacturing overhead, and whatever remains and is not allocated to overheads in this period will be the balance in this account. So your opening balance, they did give us one for indirect materials. It is here. It's the last item. That's 2,580 rands. So that'll be 2,580. Then you're looking for any purchases of your indirect materials, and it's again here in the third line, indirect material that was purchased on credit. So you will state it as creditors control. I'm just going to write it as CC, or you can even write down trade payables. That's fine as well because they do mean the same thing. So trade payables or creditors control, and that is going to be the amount of 10,864. And then there was no mention of freight and um, anything sort of anything from the likes of carriage, railage, customs, custom duties, import tariffs, and so on. So these all are taken care of so far. So yes, there's no mention of any of those. So you're going to look at on the credit side, do we have a closing balance for indirect material, or do we have the amount that is allocated to the overheads? So at the bottom here, in terms of your closing balances, there is none for indirect materials, which means we don't have a closing balance, which means we probably have the amount that is allocated to indirect material, that is allocated to your overheads, which is the amount of indirect material spent for the factory or issued to the factory. So the third last item here, which says consumable stores indirect material issued to the factory, is the amount that we're going to be using, and that was the 9,000 rand. So you're going to put in the 9,000 rand here, and then now again, whichever side has the higher total, which is the debit side here, that amount will go in. So that's 13,444. The same total goes in here, and then this 13,400 minus the 9,000 here gives you a closing balance of 4,444. So that amount now is what we're going to use in the factory overheads. So your manufacturing overheads does not have an opening and closing balance. The first item that we're going to start off with is the indirect material that we had just calculated. So this indirect material is the amount allocated to the manufacturing overheads, which was 9,000 rand. Then you have, let's look at anything else that would fall into manufacturing overheads. This is all of the costs incurred within the factory but are not direct costs. So they're not direct material, they're not direct labor, they're everything else. So that's indirect material, indirect labor, rent for the factory, insurance for the factory, maintenance for the factory, depreciation on the factory, equipment, and so on. The list can go on. So just any cost associated with the factory apart from the direct material and direct labor. So here, in terms of your factory overheads, we have your indirect material. Let's look for the others. So we did the direct labor. We're done with that. The next one is indirect labor. So that's 28,778. You'll add it in here, indirect labor. So 28,778. Then you have electricity for the factory is the one you'll use. So that's 26,672. So 26,672, that is electricity. Then you have, so you took care of that. Telephone for the factory, that is 3,708. Then you have insurance for the factory, and that's 17,560. So you'll write down insurance. Then rent for the factory is 14,000 Rand. And the last one is, so we did the factory here. The last one is the depreciation on the factory machinery. So that is 6,880. So you are going to now close off this entire amount to the work in process account. So work in process then is going to have a value of 106,598 rands. And this is then going to go into the work in process account, manufacturing overheads, 106,598. Okay, so that's your work in process, sorry, that's your manufacturing overheads account. So now for your work in process account, you have your direct material, direct labor, and your manufacturing overheads. Let's get to your work in process account opening balance. So that goes in here. That was the 1st of May. And then we have your finished goods account that it's closed off to. Whatever is not closed off to finished goods will remain as the balance in this account. Okay, so your opening balance for work in process, they gave it to you here. That was a 2,054. So that's 2054. This means that 2,054 Rand worth of goods were incomplete in the previous period. For this period, we have allocated a certain amount of material, labor, and overheads to the production process. Now we're looking for, on the credit side, the balance for the account, whatever was incomplete during this period, and whatever was complete during this period and is ready to be sold off to the customer will go into the finished goods account. So here let's look for either a closing balance or the finished goods amount for work in process on the credit side. So unfinished goods on hand is your work in process figure, and that is the 26,556. So here we have Sorry guys, I got disconnected there for a second and it just kept kicking me off. Can you confirm that you can still hear me? Okay, so back to what I was saying. Oh, sorry. I have no idea what's going on with VC Learn today. I was just talking to myself for the past few minutes. Okay, let me start that again. So that closing balance from here that we have for your work in process, that went into the credit side, and then you summed up everything on your debit side. That gave you the higher total between the debit and credit side. And then you put in that total at the bottom. That total now minus the balance that you had been given here will give you the finished goods amount, and that is 209,986. So now we have your amount for finished goods. We have now done the direct material account, the direct labor, the work in process. We did the indirect material. We did the factory overheads. So it's just your finished goods, your cost of sales, your trading account, and your profit and loss account that we need to look at. So here, this finished goods amount is going to the the finished goods ledger account. So 209,986 is the amount that will go onto the debit side of finished goods. So at the bottom here, we have the finished goods account. You will have an opening and closing balance. So I'm just going to write the words balance here. The amount that came from work in process was 209,986. And remember, we always close off finished goods to your cost of sales account. So in your finished goods account now, you're going to have an opening balance. They gave you one here. At the top, it's 10,462. Then we added onto the debit side the amount from work in process, basically saying to you that these were the goods that were completed during the current period in the production process, and now it's ready to be sold off to the final customer. Then your amount for cost of sales on the credit side is saying that these are the goods that will be sold off to the customer. Whatever remains in the account is not sold, or it's unsold in this particular period. So here we are looking for either balance again on the credit side or the cost of sales amount being given to us. So let's look for that. So in the information given, there was no value for your finished goods, as you can see on hand, your closing balance, which means that we need to calculate that. And in order to calculate that, that means they would have to have given us the cost of sales figure here. So here's the cost of sales figure, the last one under your transactions, and that's 169,000, sorry, not 189,050. So 189,050 would go in here. And then you need to now calculate your totals. So your debit side has a higher total again, that's 224,448. So 22448, and then this minus that balance will give you your, sorry, this minus that cost of sales will give you your closing balance, and that is 31,398. So that's your finished goods account. Once you have that, you will then need to draw up the cost of sales account itself. So cost of sales then would have, remember there's no opening or closing balance. Your cost of sales account would have on the debit side finished goods, and this would be at the end of April. So you can put in April 30th. So finished goods, and that's 189,050, and the entire amount is then closed off to the trading account. So you will have trading account and the 189,050. So this account, and please remember you will have to write out the entire word. I'm just writing out the acronyms here so that we can get through it quickly. So your trading account will always have sales on the credit side and your cost of sales on the debit side. So the cost of sales amount is going to be the, sales and then cost of sales. The cost of sales amount is the one from here, so that's 189,050. The sales amount we need to look for in the transactions. So here's the sales of your finished products. That's a figure of 696,480. But they also mentioned to you here that there were returns of the finished products, and that was worth 4,000 Rand. So you must show within brackets that it's 696,480 minus the 4,000 Rand worth of returns, because this needs to be net sales. So net sales means that it's sales less any returns that were made, and that is 692,480. So 692,480, and then you will need to work out the difference between your sales and your cost of sales, and that gives you a profit of, so profit and loss amount of 503,430. So you're going to take this now to your profit and loss account. So your profit and loss account, since this was on the debit side in the trading account, and there needs to be a corresponding debit for every credit or credit for every debit, we now can take this from the debit side here and put it onto the credit side of the profit and loss account. So in your profit and loss account, and I'm going to draw it up here at the bottom. So profit and loss. Again, please write out the entire word. You will state that on the 30th of April, from the trading account, it was 50. Remember, the profit and loss account has all the admin and selling expenses for the business. So your admin is everything incurred within the business, but on the office side of things, the administrative building, basically. So here, the first one would be the electricity for the office, then the telephone for the office, the insurance for the office, the rent for the office, your selling and admin costs, your stationery for the office, the salaries of the admin staff, and that would be it. So that is now going to be entered onto the debit side. So you have electricity, and the amount is 15,106. Then you have the telephone amount of 9,422. Then the insurance amount of 4,700, then the rent amount of 8,000, Then we had the selling and admin expense of 42,440. Then the stationery, and that was 2,554. And last was your salaries, and that was 49,424. So that entire amount now is going to be added up. All these figures on the debit side will be added together. That gives you, so I don't have much space here. Let me see if I can move this a bit up. Okay, let's move that a bit here. Okay, so now it should be easier to calculate that total. So now you'll add up everything on the debit. Well, actually, you don't need to add up anything for the credit side, but if they did mention to you any other form of income, then that would also go on to the credit side. So now we can put in the total. So your credit side has the greater total, which is the 503,430. So that would go into here. So 503,430, and here. And you'll now work out the difference between the 503,430 and all of these items on the debit side. And the difference is 371,784. And so you will write it down as capital, and within brackets, you can say that this was a net profit. So this is important because you need to state whether a profit or loss was made for the period. If the debit side figures are lower than the credit side figure, then it is a profit. If the debit side is greater than the credit side, then it is a loss. And if it was a loss, then the amount would be on the credit side, and within brackets you'll state that it's a net loss, or you can just state loss within brackets. Okay, so that is example question 6.3, right? Okay, so let's look at the next question very quickly. So it's not a long example, so I'll do it quickly and then you can have a break. So this is question 6.6 in your textbook, and it's based on drawing up your two statements, a production statement and your trading statement, and then your four notes. So remember the sequence I had said to you in which you will write out or answer these questions is that you'll always start off with your notes. Number one is your direct material note. Number two, oh gosh. So first is always your direct material note, then your direct labor note, then your manufacturing overhead note, then the production statement, then note number 4, which is the cost of finished goods sold, and then is your trading statement. Okay, so this is a sequence in which you will always do these questions if you're asked to do the note as well as the statement. So they said to you the following information relates to Leningrad manufacturers. They've given you your opening balances at the top here. So that's opening. They've given you the transactions and then they've given you closing balances at the bottom. They said what was required was to draft the production statement and the notes to the financial statements of Leningrad manufacturers for the year ended 31st August 2020.8. So here you're going to start off with the direct material note. So I'm just going to draw it up very roughly here. So you will state that this is the direct material note. You can literally write it out as that. So direct material note, or you can state note number one and direct material cost. Either one of them is fine. So direct material, and then you always start off with your opening inventory plus any purchases that are made, whether it's in cash or credit. You can write it out as net purchases. So net purchases would be ideal because you don't have to separate them into which was in cash and which was on credit. But if you want to separate them, that's perfectly fine as well. If you want to write down that if it was purchased in cash, you want to say bank, or if you want to say creditors control or trade payables, if you purchased it on credit, that's fine as well. So plus your net purchases and then plus any mention of carriage, railage, import tariffs, custom duties, and so on, and then minus your closing inventory. So your opening inventory for your raw materials is the first one here at the top. That is the 35,700. Then you have the, actually, let me just move that a bit to the center. Okay, so 35,700 is your opening inventory. Then you have any purchases. We are going to look for cash and credit. So you have your material that was purchased on credit, and that was 228,150. And there was no other mention of material purchased. So you'll leave it as the 228,150. So we're done with that. Then you have any import tariffs, custom duties, railage, carriage, and so forth. So you now have import tariffs, which is just below that. And it is on the direct material purchased, and it's 22,400. So your state import tariffs, and now you're adding up all three of those, and that will give you a total of 286,250. And then you're going to subtract your closing inventory. So this will then tell you the amount that is going to go to the production statement. So your minus your closing inventory at the bottom was 8,600 Rand. And that amount is 277,650. So that minus that closing balance gave you the 277,650. So this amount is what's going to go to your production statement. So remember with your production statement, I said to you that although the notes need to be done, well, the notes and your statements need to be done in this sequence at the top, you do and you should draw up all of them as the normal sequence of production statement first, then trading statement, then the four notes. But remember, when you're starting to work with them, you always start to work with the direct material, then the direct labor, then the overheads, because you need those three figures for your production statement, and then you need the production statement figure for your fourth note, and then you need that final figure for your trading statement. So do it and answer it in the sequence, but when you draw it up, when you're drawing up the tables, then always draw up your production statement first, then draw up your trading statement, and then draw up all four notes. So that would be the direct material note, the direct labor note, the overheads note, and then note number 4, which is the cost of goods sold or finished goods sold. So we have your direct material note. Let's look at entering that, and I'm going to draw up at the bottom your production statement. So your production statement, remember, always starts off with your direct cost. So you will say that this is the production statement of, and again, remember, you will get marks for this, so you need to correctly state it. The production statement of Leningrad manufacturers. So Leningrad manufacturers, and it is for the year ended 31st August 2018. Okay, so you will always write that out, and then you start with your direct costs. And in terms of your direct costs, it's always going to be direct material and direct labor summed up to give you your direct cost. Then you add on your total your manufacturing overhead cost, and this will give you your total production cost. Then plus your open in process balance minus your closing work in progress would give you the total cost of production goods. Sorry guys, I got disconnected there for a second. Can you hear me? Okay, thank you. So as I was saying, your direct labor account is the next one that we're drawing up. So in terms of your direct labor, you're going to look for, remember, there's no opening and closing balances. So you will state that this is note number 2, and this is your direct labor note. So here it is going to be just the cost of the wages or the amount of the wages together with any contributions that were made. So you can state factory wages are being paid and the amount for it is the 70,000. Then you have the pension fund, that's the 15,600. So that's pension. Then you have the medical aid contribution, which is 13,700 Rand. Oh gosh, sorry. Okay, yeah. So your medical aid amount is 13,700, and the last one is your UIF contribution, which is 700 rand. So you're going to then total up this amount, and this is 100,000 rand. It's exactly 100,000 rand. So that entire 100,000 rand will go into the direct labor portion of the production statement. So here we have your direct material and your direct labor added up gives you your direct costs, which are also known as prime costs. It's 377,650. It's these two added up. Then your overheads account, it also works in the same way as your direct labor. So you don't need to account for any opening and closing balances. It's just going to be all of the costs incurred within the factory apart from the direct material and the direct labor. So basically everything else from your rent for the factory, your depreciation for the factory, your indirect material, indirect labor, and the list will go on. So let's have a look at that. So that's note number 3, and that is manufacturing overhead note. So here you're going to do exactly the same thing, and you're going to start off by identifying, sorry, it should say manufacturing note. So manufacturing overhead note, the first thing is your indirect labor. So remember, this is basically saying any indirect material, any indirect labor, any depreciation, insurance, water and electricity, maintenance, and so forth will go in here. So your first item is your labor, and that's 59,850. So here you will say indirect labor is 59,850. Then you have, so that's done. Then you have the indirect materials were purchased and it was 44,000 rand for the factory. Now this is important because again here, although they haven't actually asked you for any indirect material note or any indirect material ledger account, you do need to acknowledge it and calculate it, because we do need to be able to identify what the cost is that was associated with your indirect material for your overheads note. So here, your indirect materials, we're going to look at how your ledger account would have been drawn up. And the reason I'm saying ledger account is because, again, they haven't asked you for a note here, so you don't need to worry about drawing it up. You just need to look at what the amount is that would go into your overheads. So you have an indirect material opening balance and it's 10,000 Rand. And remember, your indirect materials generally works with your opening balance of 10,000 Rand. Then you're going to add on anything that was purchased. If it was in cash, it would be label bank. If it was on credit, it would be trade payables or creditors control. And whatever is used will go to the overheads account. Whatever is not used will remain as the balance in this account. So here, your indirect materials is going to be your opening balance of 10,000 Rand. Then whatever was purchased in cash. So it says indirect materials purchase was 44,000 Rand. So I'm just drawing it roughly, as you can see, just so we can calculate the value closed off to the manufacturing overheads. So on the credit side, then you either have a closing balance for indirect material or you have the amount allocated to overhead. So as you can see at the end here, we have the amount that is remaining for your indirect materials, and that's 6,550. So that would mean we would need to add up both sides, the higher total for your indirect material. So that is the 10,000 and 44,000. It's 54,000. I'm just going to write down the total here and here. So 54,000 now minus the 6,550 is telling us that the amount that's going to the overheads account is 47,450. So this now tells us 47,450 is what goes into here. That's indirect material, 47,450. That's indirect material. Then you have the depreciation on the factory equipment that we need to include. That's 21,000. So you're just going to say depreciation and 21,000. Then you have the insurance for the factory only is 10,050. That's insurance. Then you have water and electricity for the factory. That's 57,750. Then you have repairs and maintenance for the factory equipment. That is 13,000 rand. Then you have, sorry, this is repairs and maintenance. So I'm just going to label it repairs. Then you have salaries for the factory managers. So that's here. 112. No, so factory managers, 125,000. So wages, 125,000. And the last one was the rent paid. So that is 75% for the factory. So that's going to be 150,000 times, so rent. And please make sure that you do show this in table format in an exam, because you will lose out on marks if you're not showing that amount. So 150,000 rand multiplied by 75%, and that was, so times 75%, and that was 112,500. So that's all our manufacturing overheads amounts. And once you're done, you can now total this entire account, or note, sorry, and that's 446,600. So now that we have the notes all done, the first three notes, that 446,600 will go in here, 446,600. And now that amount plus the direct cost of 377,650 must be added up. And that gives you a total manufacturing or production cost of 824,250. Then that total plus the work in process opening balance, that's the 9,350, minus the closing balance of your work in process, and that's the 27,000 rand. That then gives you a total cost of your production of finished goods, 806,000. I'm just going to write it here on the side so you can see that. 806,000. Okay, so that's your the first four. Then it's the statement, then it's a cost of finished goods sold ledger account, and then the trading statement. So we did this, 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 and this at the top. We just didn't do those last two. So the final figure from here, the 806,000, is used for note number 4. So note number 4, then let's take the 806,000 to it. So this is the cost of the finished goods produced, or sorry, the cost of your finished goods sold, not produced. So note number 4, so cost of finished goods sold. And here the first item is the opening inventory. So opening inventory is of your finished goods. Opening inventory of your finished goods. It is the second one here, and that's 15,250. Then you're going to add the amount that came from note number 4, and that was the cost of finished goods produced. So plus cost of finished goods produced, and that was the 806,600. So 806,600. Ignore the 6 there. Okay, so 806,600, and then you subtract your closing balance. So minus the closing balance for your finished goods. Your closing inventory or your closing balance, that was here at the bottom. Your finished goods is 17,000 rand. So minus the 17,000, and this is going to tell you your cost of sales for the question. So your cost of sales is 804,850. So here the last statement is your trading statement. So you're going to state then that this is the trading statement of, and the company name is Leningrad. So trading statement of Leningrad manufacturers, and you'll say that it's for the year ended August 2008. Or actually, yeah, 2008. Yes, 2008. Okay, so I'm not going to write down the whole year here. It'll be for August 20.8. So you will state though that it is for the year ended August 20.8. So then you have your sales minus your cost of sales or your cost of goods sold, and that will tell you what your gross profit is. Okay, so your sales, they said to you, is going to be the sales of your finished goods. There was no returns that were mentioned, so we'll leave that as is, the 1,800,000 and oh, sorry, I'm looking at the wrong figure. It is your 955,000 here. And your cost of goods sold is that last item here, which is 804,850. And that gives you a profit of 150. Okay, so that is your question 6.6. We now did all 4 notes, and we did your production statement and your trading statement. Any questions here? Okay, so if there are no questions, then I will give you a break. When you get back, we're going to work with Learning Unit 7. Okay, let's get started. So the last learning unit is called job costing. It is quite repetitive of the content that we saw in both Learning Unit 5, where we looked at the predetermined overhead rates. It's almost exactly the same thing. So that's not going to take us long at all. And then we have part of it being repetitive of the ledger account that we just saw in Learning Unit 6. So it is mainly a learning unit that's just repetitive of the others, not too much entirely new content. I think there's just one thing that you'll come across that will be new and different from anything that you've seen in the other um, learning units. So, what we look at under job costing, you will see is, like I said to you, we look at the predetermined, sorry, these are the pages in your textbook that you'll see it in. And then, as I was saying, what we look at here is calculate them here again. You'll see that there's a couple of steps involved in job costing. We firstly determine those overhead application rates, which is what we already did in learning unit. Um, Sorry guys, can you hear me? Okay, so as I was saying, we look at your predetermined, thank you. We look at your predetermined allocation rates that we already had calculated in Learning Unit 5. And we also did an example in Learning Unit 5. If you can recall, it was question 5.12 in your textbook where we took that allocation rate and we applied it to that example where we calculated the total cost of the job. And we said that the total cost was made up of the sum of your direct material, your direct labor, and your applied manufacturing overhead. It's the exact same thing that we're going to do here with this learning unit as well. We calculate the total cost of a job. Then we also did in one of the examples, I think it was in straight after the predetermined allocation rate question, we did an additional example. And in that example, I had done with you a question where once you've calculated the total cost of a job, you would then work out the profit or loss that would be made if they have a specific markup percentage. So let's suppose you calculated that the total cost of a job is 5,500 Rand, and they would say to you that the company wants to make a profit of 20%. So you would work out the selling price by saying that cost multiplied by 120 over 100, and that would be your selling price. So we're going to use this method, but I will show it to you again as we go along. Then we also, in question 5.12 and in learning unit 5, calculated the over or under allocation or absorption of your overheads. Remember, the general rule was that if the actual is greater than the applied, then it was an under allocation. If the actual is less than applied, then it's an over allocation. And then we have calculating the cost of a job, bringing work in process and finished goods into account. We look at how to complete a job order cost sheet, and then we look at, and this is the only really new part, these two that I'm circling, of learning unit 7. So we look at how to draw up a job cost sheet and then what the difference between normal versus abnormal spoilage is. And then, as I said, this is repetitive from what we just looked at in learning unit 6, your ledger accounts relevant to a job costing system. So let's go ahead and get started. Wherever there is theory that you are able to read through on your own that's not relevant to a calculation or practical question, I'll let you know and you can read through that on your own. So here we're looking at what job costing is about. So in the third point, please highlight that with job costing, we categorize and accumulate costs per job, meaning that an order comes through from a customer for a specific number of items that they would like to be produced or that they would like to purchase, and we are then going to work out what is the total cost associated with this job. So let's suppose, for instance, a customer wants to purchase 1,000 units of a particular item that we sell. We need to look at, for those 1,000 units, what is the material cost, what is the labor cost, what is the overhead cost. And then once we know the total cost that goes into the production of those 1,000 units, we then need to work out what percentage of markup do we want to add onto that total cost, and what profit do we hope to make. And then we are now going to determine our selling price using that. And then we use, remember we said once we have an allocated rate, we use that compared to the actual overheads for the period and determine whether there's over or under allocation. So the whole process of a job coming through from a customer, determining the cost of that entire job using the sum of the direct material, direct labor, and overheads is what the job costing system is about. So you can read through the rest of this. I explained most of it to you already. And then here you can also look through the difference between process costing and batch costing. So you can read through the differences between those. The next thing we're looking at is how to bring in your overhead costs. Remember in Learning Unit 5, and you'll see how it's really repetitive here. In Learning Unit 5, remember we said to calculate the predetermined allocation rate, we would take your budgeted overheads and you would divide it by the chosen basis. That's exactly the same thing that we are doing here. We're taking the budgeted overheads and we are dividing it by the chosen basis. We have also, remember, sometimes for your budgeted overheads, they give you the figures as fixed and variable. So you will need to add up the variable and the fixed to give you your budgeted overheads. So variable plus fixed for your numerator if they have separated them, and then it's over your chosen basis. Okay, so exactly the same thing is here. As you can see, it says what are our overhead application rates. So we're going to use any one of the five bases that we also saw in Learning Unit 5 to determine your allocation rate. It's either going to be, and remember they will specify this to you, it's either going to be on the basis of material costs. So you will say the budgeted overhead over the total budgeted material cost multiplied by 100, because this is expressed as a percentage of material costs. Would be your budgeted material or material allocation rate. Then if it's based on units of production, you'd have your budgeted overheads over the number of units produced and you'd express it as a rand per unit. Then if your overheads are calculated on the basis of machine hours, it would be budgeted overheads over the number of machine hours, and that would be stated as a rand per machine hour. If it's on the basis of labor hours, then it's budgeted overheads over your budgeted labor hours in total, and that's stated as rand per labor hour. And the last one is your direct labor cost. So your denominator is going to be your total budgeted labor cost, and it's multiplied by 100, so it's expressed as a percentage of your direct labor costs. So any one of those five can be given to you. It just depends on the information provided in the question. They will specify which of them it will be. So once you have that, you're going to use it to calculate your total cost of a job. As we said to you, it is going to be direct material plus the direct labor plus the manufacturing overheads. Once you have that, this tells you the cost of the job. And as I said, if you have a specific order for 1,000 units and you had calculated that the cost is, for instance, 5,000 Rand, you're then going to say that the company hopes to make a specific profit of maybe 20%. So you would multiply that cost by 120 over 100, and that would tell you what the selling price is that they would charge. So they've given you the same example here, and they said to you that, for instance, if the total cost to manufacture a desk was 250 Rand, and you wanted to make a profit of 30% on the selling price, then to calculate it, you would, sorry, on the cost price, then to calculate the selling price, you would take the cost price, this is the formula you're using, and multiply it by 100 plus the markup percentage over 100. And this would be the 250 Rand multiplied by 100 plus 30%, which is 130 over 100, and your selling price would then be 325. So this is how we calculate your selling price, and we're going to use that in the next example to just very vaguely, it's not a very in-depth example. I will go through one that's more in detail and a typical exam type question later on. So here it says to you, Tybo Limited uses a job order cost system. The following information related to job 1 undertaken in August. The manufacturing overheads are applied to jobs at a rate of 50% of the direct labor cost. So this is very important. It's telling you to calculate your overheads. You're going to determine it by applying the cost at 50% of the direct labor cost. So whatever the labor cost is, it's 50% of that as your overhead cost. Is 40,000 Rand. I'm so sorry, I have no idea why it's duplicating on the screen. I'm not sure if it's on your side as well, but the example is in the textbook, so you can follow it there. So that's your material use, 40,000 Rand, and then your labor is 30,000 Rand. So to calculate the total cost of a job, remember it's direct material plus your direct labor plus your manufacturing overhead. So your direct material is your 40,000 Rand, which is here. Then your direct labor is the 30,000, which is here. Your overhead is now 50% of the direct labor. So the direct labor was 30,000. You'll work out 30,000 times 50%, and that gives you 15,000. So these three added up then gives you a total cost of this job of 85,000 Rand. So again, this is very basic. It's just giving you a feel for what will come. It's just setting the foundation for how you're going to go about calculating the. When we look at calculating these total costs of a specific job, a lot of the time you're going to see, and this is something that we didn't actually do in the example we looked at last week or the week before that, where apart from the fact that we add up direct material plus direct labor plus your manufacturing overheads to give you the total cost of a product, we also, like the ledger accounts work, we also have to consider that though this is the total cost of a particular product or particular number of products in a specific period, there's also work in process that we need to consider. Now, remember, work in process is basically, in terms of the ledger account, work in process said that this was like the factory. Sorry, let me just write that down. This was like the factory, the assembly line in a factory, where we would allocate a certain amount of material, a certain amount of labor, a certain amount of manufacturing overheads to the production process. This is the production process, and we would aim to produce a certain number of units in a particular period. Maybe 5,000 units needed to be produced, but we cannot guarantee that all 5,000 will be produced. So if at the end of a period we only end up producing, let's say, 4,500 units, this was your actual production. So I'm going to say here the aim is 5,000, but we actually produce 4.5. Whatever remains, which is now going to be the remaining 500 units, is going to be a work in process. It just means that we started the production in a specific period, it wasn't complete. So now in the next period, when we start to produce again, we need to first finish off this 500 and then start with the production of the new items for this period. So whenever we are looking at a production process and calculating the total cost of production, we must always consider that there may have been goods that were incomplete from the previous period that need to be complete first, and then we can start for this month or this period. So, like we said here, the 500 units would need to be complete first. So, whatever work in process we have, we need to first complete it, and then we need to look at any material, any labor, any overheads that go into producing this month's item. So this is for the current month or the current period. This is from the previous period. So we always need to consider the possibility that there is going to be items that were incomplete in the previous period. We need to add it onto the current period so that we can start off producing those and then produce whatever currently needs to be produced. And that in total now will give you your total production cost for any particular month or period. So apart from adding up material, labor, and overheads to give you the total cost, we must also consider bringing in any opening work in process balances to account for completing goods that were incomplete previously. So we need to bring that into our calculation. So the same example, more or less, that we were working with just now. So example 7.2 in your textbook says to you that Taiwo Limited has provided you with the following information: the same 40,000 Rand material, the same 30,000 Rand labor, and the total cost is going to be the 40,000 for material. We already saw this. The 30,000 for labor, we already saw that, and the 15,000 for applied overheads because it was 30,000 times 50%. That was the application rate. So in total, it was 85,000 Rand. However, we also saw that from the previous month, so this was August, which means at the end of July, there were goods that were incomplete to the value of 7,500 Rand. So we need to the month of August, say that whatever was incomplete in July needs to be brought in. So bring in that 7,500 together with now what we aim to complete in August is 85,000 Rand worth of goods we are trying to complete production of. And so the complete cost is going to be the sum of those two, which is 92,500. So altogether for the month of August, the aim is now to produce 92,500 Rand worth of goods. Okay, any questions there so far? All right, so I'm going to stop there for today because I have another class now as well. When I see you on Friday for this module, I will complete this learning unit. And then I'll also be going through one or two additional questions from within the learning unit. And then I will be having that revision session next week for the exam. So I am going to upload the past papers to VC Learn. Please do try and start working with them. And I will see you, I think it is tomorrow for stats, or whenever I see you again for stats, and then on Friday for finance. Yes, it will be face to face.